Well, guys, have you ever used a RSI and still feel like it was lying to you? So, one moment it screams overboard and price keeps going higher. Then it shows oversold and the market just keeps tumbling. So, today I want to show you a RSI the right way, guys. Not as a magic buy sell button, but as a momentum tool you can actually build trades around. So first, I'll explain what RSI really measures, why the classic 70-30 levels can be misleading in trends, and which buy and sell signals actually make sense. We'll talk about trend-based RSI signals and also touch on divergences. And then we'll move to practice. I'll open one or maybe a few trades using the exact same logic from the theory and see how it plays out. What RSI is and what it measures, guys. So RSI is a momentum oscillator. It measures the speed and strength of the recent price changes. Its values range from 0 to 100 and the classic interpretation is simple. Above 70 is considered overbought. Below 30 is considered oversold. And the idea is straightforward. So the stronger and more frequent the bullish moves over the recent candles, the higher the RSI. So the more dominant the bearish moves, the lower the RSI. But here's the key thing most people miss. RSI doesn't predict the future. It shows the strength of momentum right now. So how dominant buyers or sellers have been doing in the selected period. Okay, for example, the classic 70-30 levels and how not to misuse them. So yeah, RSI above 70 is an overbought zone and below 30 is an oversold area. But this is very important. These are not reversal points, guys. They are zones or areas of increased risk, areas where a reaction might happen. And in strong trends, RSI can stay in these areas for a long time. So if you sell just because RSI is above 70, you can easily get burned. And the same thing applies on the downside in strong sell-offs. RSI can stay below 30 for a long time. And buying just because RSI is oversold can be a mistake. The most important thing, RSI must be read in trend context. So in a strong uptrend, RSI usually stays above 30 and often reaches 70. In a strong downtrend, RSI rarely reaches 70 but frequently drops to 30 or below. So here's a very practical insight. In a downtrend, RSI often has a selling, not at 70 but around 50. And RSI rises during pullbacks but fails to go above 50 and 60 and then turns back down. So that's a strong hint that the pullback is weak and the downtrend is still in control. And that's where you can look for sell setups. And in an uptrend, it's the opposite, guys. So RSI often holds around 40, 50 during pullbacks and almost like a support area for momentum. And if RSI dips to that and then turns back up, it can confirm trend continuation. And that's where buy setups make sense. Well, RSI divergences, when price and momentum disagree. Now let's talk about one of the most confusing topics, guys, divergences, really. A divergence happens when price and RSI are doing different things. It's a hint that momentum is just changing before price does. Bullish divergence, price makes a lower low, but RSI makes a high low. And price pushes lower, but bearish momentum is already weakening. And bearish divergence, price makes a high high, but RSI makes a lower high. So price looks strong, but bullish momentum is fading. But this is critical. Divergence is not an entry signal. In strong trends, divergences can appear multiple times before any real reversal happens. So that's why I use divergences rarely and never trade them on their own, guys. So that's really important. And I treat them as an early warning, not a trigger. Entries should always come from structure, levels, or confirmation. Swing rejection, the most structured RSI signal. So 4 steps, guys. Now let's talk about actual signals. So the most structured RSI setup is the swing rejection. And the reason I like it is simple. It has clear rules, not guesswork, no any guessing. So bullish swing rejection step by step. So RSI drops into the oversold area below 30. Then RSI moves back above 30, and after that RSI just moves back again but fails to go below 30. And finally, RSI breaks above its previous local high. So that's the trigger. And bearish swing rejection works the same way but just mirrored. RSI moves above 70, then drops back below 70 and makes another push up but fails to return above 70 and then breaks below its previous local low. That's the trigger. And the logic is simple there. So the market shows an extreme, pulls back, tries again but fails. And in this situation, momentum is gone. And RSI often shows this very cleanly and not for beginners. Of course, the more experienced traders can trade RSI in many different ways. So some enter when RSI just touches an area, others trade when RSI stays in an area for a long time or on the first breakout of an area. But no, guys, none of this random. So those entries always depend on additional factors like support and resistance level, trend direction, confluence with other indicators, and however, based on a beginner-friendly tutorial. So don't overload your brain, guys. So stick to the setups we discussed or trade RSI in the direction of a clear trend. And a good trend is the best friend, really. With practice, all of these will start to make sense naturally. A quick note on the book. So by the way, RSI was developed by John Wells Wilder Jr. and introduced in his 1978 book, New Concepts in Technical Trading Systems. So if you're a bit of a trading jerk, I highly recommend reading it. So you will get a much deeper understanding of momentum and significantly level up your skills. And now, let's move to practice, guys. Alright, we'll move to the broker, and I already selected the most stable company stocks for today. And at the current moment, you can see all of them right here. So starting from Apple, American Express, Intel, and so on. So the payout percentage is close to the maximum almost every asset. So overall, we can move on to the analysis. I also already added RSI as an example. And I'll be using a period of 20 here. So these are the settings. In the style section, the overbought area is set at 70, the mid-level at 50, and the oversold area at 30. And we're gonna open trades with a 3-minute expiration time. And when using this expiration time, we analyze the chart on the 1-minute time frame. And overall, RSI with a period of 20 works perfectly for this type of trading. So let's start the analysis, and I will choose the most optimal stock where we can see a signal and begin trading. Well, let's stop at Intel stock, and here we'll be using RSI and more just its mid-level as a support area during an uptrend. And as you can see, guys, the trend here is bullish and the price bounced off the structural level, and we mark it as a support area. And as you can see now, RSI is reaching the level 50 and moving slightly below it, which overall gives us a good signal to open a buy position. And we're opening a trade for 3 minutes with $70 position size. So let's additionally mark the working area. So here I'm marking the level 50, and this is where the touch occurred. Also within the current uptrend, we can see that there was breakout followed by a small pullback. And this is our key entry point, and I expect the further movement to go upward. So that's the entry logic here. Well, and we mark the global low of this trade as well. So once again, the green rectangle represents our so-called support area, and the price bounced upward from it. So, and about 2 minutes remain until the position will end. So let's watch the result. We are just waiting for the trade to finish. The last seconds remain. And as you can see, the trade closed confidently in profit. Good. The price just moved upward, securing a positive result. Overall, nothing complicated here. Correct analysis, just proper understanding of price dynamics, and no issues at all. Good. So let's open another trade and possibly go through the exact example I mentioned in the theoretical part. If we get the opportunity and the right pattern forms, and yep, we just continue the analysis and select a new stock. Now let's stop at Apple stock here. So there is a potentially good entry point from a level here, and RSI lines just already moved far beyond the overbought area and continues pushing upward, which gives us potential for a sell trade there. Yep. And with the formation of the next candle, I'll just open the trade and explain the entry logic. And guys, this is not exactly the textbook signal, just I described in theory, but I still consider it a decent entry point. So in a few seconds, we open the trade and right here we enter a sell position. Well, in this green rectangle, you need to pay attention to this part of the movement. So as you can see, there was no clearly defined trend here, unlike the previous move. And after that, we had a clearly defined downtrend. And this indicates that there was a large amount of trading activity, a battle between buyers and sellers, which formed a kind of ranging movement. Therefore, when the price returns to this previous range, we should expect high trading activity again, as many traders will trade the bounce from the level, and while others will trade the breakout. And in this case, we are trading the bounce from the level. Let's also highlight the working area for a clearer example. And after updating the global low, we can see that the price starts to gradually change its direction. Then we observe that strong bullish volume and impulsive move upward, and the covering situation just is similar. So we again have an impulsive upward move, and the price has entered that same price range, and here a new high is forming, and from this high we're expecting a move downward. So we see that RSI line, as I mentioned earlier, moved beyond the overbought area with a strong impulse. And in this area, we see RSI crossing the area from top to bottom, so which is our signal to open a sell trade. Yeah, that's pretty simple, guys. So that's the entry logic, the whole logic strictly in the area where trading and the battle between buyers and sellers previously took place. And overall, I believe this trade will also close in profit, and about 10 seconds remain until expiration, and the price no longer has a chance to move impulsively upward. So yeah, the position closes in profit, right? Good. So this is how we executed two trades based on the theory I discussed earlier. Pretty good. And if you trade using RSI alone, you definitely need to add technical analysis to your trading, just like you have seen in this session. And I also recommend you to use all the indicators and combine them to better understand the trend movement, or to more easily identify structurally important levels. So that's it for now. These are the two trades we ended up with. So let's maybe lock in today's profit and go to the withdrawal section. And the withdraw approximately $100 to Tether is the TTRC20. Yep. The profit amount is a great result. So we enter the confirmation code from Google Authenticator and just done, and just click continue. And the withdrawal operation is successfully processed, guys, and we wait for the funds to arrive in our account. And as you can see, the price is still moving downward, which confirms that the entry point was absolutely correct. And with that, let's wrap up the practical part of this tutorial, guys. So that's my RSI breakdown for you guys. So theory plus real trades. And the main takeaway is simple. So RSI does not predict the future. It shows momentum. So when you stop trading 70-30 as rigid rules and start using RSI with trend context and proper setups, your entries become much more controlled and just intentional. So thanks everyone for watching. And if you want to trade sessions like this inside a private community with me and my team, you know where to find me, guys. All the links are in the description. Just message me. So see you very soon.